Okay, here's the deal. Here's the deal, okay? If I was so smart, I'd be rich, right? And no man knows the future, correct? But every woman does. You guys are far above average, and I know first impressions are important, and I hope it's a bad one right now. Would you mind if I take off my jacket?
No, take it off.
Anybody want me to leave it on for, publicity or whatever? Okay, now we can get to work. We're going to be going really, really fast. You guys are far above average in intelligence. There are going to be a lot of things that you're already aware of and other things and connections. What's going to happen is it's going to be like crap through a goose. It's going to happen fast. I'm not here to change your mind. I'm here for you not to agree with me. I am here for you to decide where you think we're going to be in 5 years. Real estate is not about now. It's about yesterday. What is more important, return of or return on equity? There's a lot of money sloshing around out there right now, and it's competing with you. If you're an American, there are so many foreign dollars flowing in here from all over the world, it's unbelievable. So what we're going to do, fasten your seatbelts, we're going to touch on every major class of real estate. We're going to look at how financing, in my opinion, what it looks like in the future, where this country's going. And I have a portfolio myself, and right now I want Stephanie Bacon to stand up. Stephanie, she's going to be working so hard, she's going to be sweating, she's going to be turning slides. And as I understand, stand up, please.
Oh, I'm sorry.
I wouldn't be here except for her, so turn around. Yeah, y'all give her a hand. And at the end, going to be doing. I need somebody. I need an assistant. What happened? I had some money right here. Oh, it's right over here. Ma'am, would you do me a favor? I want you to go give every other one of those. Okay. Every other one. All right, that's number one. This right here is my saber. This is my saber, the lightsaber. Came from Star Wars. It's absolutely unbelievable, powerful. When I turn it off, it recoils, okay? So we're going to be talking about, most of us are going to spend most of our time into the future. So we're going to walk there as to where we are all over the place. I need someone else. The chairman, would you pass this out to everybody? Right? This right here. Now listen, we're all on the same team, okay? We're all on the same team here. And this little sign right here, anything negative that I say about the economy, anything negative that I say about real estate, oil and gas, bonds, stocks, or whatever, realize you're in the right place at the right time. You are in Texas, all right? Texas is not necessarily an island. However, there is no other place in the United States that we should be doing our investing except right here, all right? There's money pouring in here from all over the place, and this is my view of Texas. Sorry it's not in the presentation. Okay, so let's go to the next one. Stephanie's going to be clicking for me. This President Obama, God bless him, we needed him to stay alive, and we need him to retire. Okay, so let's go to the next one here. Enough said. All of these slides and a copy of the basic notes, which we'll slide through pretty quickly because your intelligence is far above average, and the average person can speak or can perceive 7 times faster than the average person. And here's the problem. We're going to be going quickly. It's all going to be tied together towards the end. Right now, I am honored to be here, and I'm not being paid to be here, so I can say anything I want to. Right, Stephanie? All right, that's our deal.
Well, if Doc says it's okay.
No. It's going to come out anyway, okay, regardless, all right? He's working for all of us right now. I have been wrong in the past. Who would have ever believed of the interest rates where we are right now? Remember 9/11. 9/11, 3,000 poor people perished in that, and the economy just got knocked off its socks. You remember? You can remember where you were when you saw it and all that kind of stuff. And the stock market took a hit, the economy took a hit, and they blamed it all on 9/11. Events occur, all right? However, we blamed everything on 9/11 when in fact it was part of a normal cycle. You guys got in the hotel business afterwards, which was great. On the downside, I've noticed that you acquire and you get rid of on the upside, which is really, really good. You don't just buy and hold and sit there like a dummy, all right? So to make a long story short, President Bush comes in. His mother is on the dollar bill. Next time you take a dollar bill out, you'll see Mrs. Bush is on the dollar. The dollar has tanked since that point of view, since that time. And the whole deal is now Hillary's on the dollar. I don't know if you noticed it every time you look at the dollar. Politics and the Fed. I had a meeting with Fed in Atlanta yesterday. They got on an airplane. They came here. We talked. We traded notes, and we disagreed on a few things, which is just fine. They believe that the gradual interest rate increase is only going to be gradual, like maybe a quarter of a point or whatever like that. You know, good things take a long time. Bad things happen in a hurry. So we've got some great things going on. We've got some bad things going on. But when 9/11 occurred, this country was trying to figure out what business they were in so they could get the economy going again. So Bush takes out an arrow out of the back of his backpack, and he says, we have got to put people back to work in this country and give them. So what we're going to do is make it real easy to borrow money. If you have a pulse, everybody feel their pulse right now. If you got a pulse, you can buy a house. Artificially low interest rates, easy to get a loan, all that kind of stuff. Housing market took off. We all got rich. And then we said, oh, we've had a housing bust and all that. But you know what? It was worth it. It was worth it to get to where we are now, but one of these days we're going to have to pay. So I was wrong on the interest rates. Then we got quantitative easing. We've had 4 of them where the feds are trying to keep the economy going while the rest of the world is reeling. And so as a result of that, every time they stopped buying bonds, every time they stopped buying bonds, the stock market went down 23 to 26%, like immediately, just like that. So we have had a wonderful run in Wall Street, 15 years on financial assets. Stocks and bonds, stocks and bonds, stocks and bonds. In the meantime, real estate has been doing just quite well here in Texas. So let's go to the next one. This is about tomorrow night. General overview. The American economy is very weak right now. I'm here to tell you. And Texas is booming, so take off your colored glasses, put up your periscope and things like that. The rest of the country is not enjoying what we are here in Texas, all right, for various reasons, which we'll talk about. Real incomes in the United States have dropped $4,000 to $5,000 over the last 4 years. That means retail is in a little bit of trouble for the lower 80% of the population in the United States today. Taxes are at absolutely the lowest they're going to be. Income taxes are the lowest they're going to be for the next 20 to 30 years. They can only go up. They can't go down because the government needs the money. Government, on the other hand, is borrowing money at unbelievably low prices, unbelievably low interest rates, less than 2%, all right? And yet we have $19 trillion in federal debt, which, what are the chances we're ever going to pay that back? We'll go there another time. Let's go to the next one here. And we don't have inflation. I don't know about you, but I love inflation. I like to borrow money at 4%, and I like my asset to go up 12%. We call that positive leverage, right? And everybody in this room understands that whole concept. Well, the feds yesterday are saying we could use a little more inflation. Is there any such thing as a little more inflation? Let's go to the next one here, please. Obama wants spending high at 7%. That goes right in our back pocket. After-tax cash flow is more important than gross income. Let's go to the next one here. Obama calls for more taxes on the wealthy. That would be you guys. The top 10% in this country own about 70% of the assets. I want to keep it that way. But we've got risk. We've got real risk. What is that risk? The divide between the have-nots and the haves, and we're haves in here. There's some resentment there. There's a lot of tension there. There's a lot of blame game there. Back in World War II, let's go in history just a little bit. World War II, what was that all about? Well, we came out of the Depression in the 30s. What got us out of the Depression? War. War is a great economic stimulus, okay? So what Hitler did is he looked around and he said, well, I got to get these people back to work. Sound familiar? Yeah. And we want them to make more money. So what we're going to do is we're going to have a war. And what we're going to do, where are we going to get the capital to have a war? Nobody will lend us any money because our credit's no good. Sound familiar? Yes. Okay. So what we're going to do is we're going to attack the Jewish people, okay, because they have all the wealth. They own the banks, they own the real estate, they got all of the bank accounts, and they're good business people, etc. And we'll just say they're bad people, take their assets, and what we'll do is put everybody to work. And everybody said, yay, we're working, at the expense of someone. This time it could be the capitalists, which is you guys, us. So I don't like that. And we can be attacked. And since we are a popular voting country, what do you think would happen today if there was a vote in the United States to cancel all student debt? Let's just cancel it. They would pass. What would happen if they said, okay, to the popular vote, not Congress and not the Senate, and they would say, I think we should tax everything 70% over $125,000. Would it pass? Absolutely. The haves against that. So you guys and me are a target. Let's go to the next one here. All right. We're a nation of insecurity right now. They're worried about Ebola, and they're worried about terrorists, and they're worried about earthquakes in Irving, Texas. Anybody from Irving in here? It rocks you to sleep, right? Okay. So we also have an awful lot of wealth that is built up in the people that are approaching retirement, myself included. What am I going to do with it? Well, I've been a wild man investing in oil and gas and real estate and ranches and all these other kind of things for a long, long time. And now I'm thinking, I'm not sure if I'm going to do that. What if we all go and cash in our mutual funds and our retirement accounts all simultaneously? Wall Street goes south. What is driving Wall Street right now? I'm insecure about it. Well, Wall Street investors right now are investing for 1.5% dividends. Okay? Is that good or bad? Compared to 2% treasuries for 10 years. Well, let's see, it's good as long as the stock grows. Can anybody in here tell me what business is doing really, really well in the United States that employs a lot of people? Tech. Well, housing business is doing okay in Texas. Car business, they've raised prices $15,000, $20,000. My wife's brand new Tahoe cost $20,000 more than the last one we bought 3 years ago. It's ridiculous. It's absolutely ridiculous. So prices are going up, but not as fast as incomes. Let's go to the next one here. 2015 goals, what are you going to do? What are you going to do with your money? What should we invest in that is, quote, quote, safe, that has growth potential, and has tax ramifications? Let's go to the next one. And we've got some bad stuff going on. China's not having a good time right now. They are dying. They moved all the farmers to the city, put them to work to sell stuff to Walmart, and guess what? We're not buying it. Walmart's profits are down. For the last 4 years in a row, the last 16 quarters, they're making a lot less money than they have in the previous. Go to the next one here, please. Let's go on the next. U.S. go back one time if you don't mind. So what we've got to do is make it easier to buy a house. So what we've got to do is relax the mortgage. Anybody refinanced in the last 2 years? I bought a house last year. I sold a ranch, bought a farm in Collin County. Supposed to be 4 million people in Collin County in the next 20 years. I'm such a smart guy. Bought this farm. A guy from Brussels shows up in a black BMW last year. Rolls down the window talking to my wife. Every time I come by your farm, I feel a special peace. My wife is a smart person except picking spouses, okay? And she looked at him and she said, well, how much peace do you actually feel? He bought it in 10 days. Listen, he bought it in 10 days. He paid cash for it. He wrote a check for it. He's from Brussels. He's got fancy race horses and all that kind of stuff. And we had to move. He closed in 10 days and we had to be out in 10 days. I mean, the velocity is unbelievable. So I had to go rent a goddamn rent house in Frisco, Texas for $5,000 a month. Now you would think that would be a piece of cake right down the road down here. There were 7 applications the first day it came out. They wanted tax returns just like a mortgage or something. It's crazy. It's absolutely nuts. Come to find out, a former student of mine was the agent representing the California owner who paid $500,000, and I got the deal. In the meantime, we get a call. We get a call from a broker. We've been looking in Argyle for like 10 years. I can't afford it. I'm a broke school teacher. And the lady says, I got your farm. Who is this? It's not on the market. It's a hip pocket deal. There's a lot of real estate transactions that are happening outside of the normal MLS and all that. It's crazy right now. And I said, honey, you want to go look at it? She said, yeah. We walked in, $1 million deal, $600,000 down, and I almost couldn't get a loan. The application was that thick. So yes, interest rates are low, but they're not attainable and they're not achievable to people who want to borrow money. Right, Faust? Where are you? I saw you. There's Faust over there. Yeah, so I'm telling you, I was getting a Fannie Mae loan for $400,000, and you thought it was 60% down payment. This is what is rippling through the economy right now, and we'll get to it here in a second. Let's go easier. So the dollar's screaming north right now. Money is flowing in here from all over the world. Why? Because of all the dysfunction in Venezuela, Russia, Middle East. They perceive that the U.S. dollar is safer than any other investment or currency in the world. Now that is scary. Because I think we will be the last one at the glue factory. In other words, the euro will go down, the yen will go down, the dollar will still be there. It's still FDIC, which we had discussions on FDIC. And I asked the question, you all listen, escuche, they call that in Spanish, escuche, okay? Anybody speak Spanish in here? Did I say it right? Okay, escuche. Oh, by the way, do you know what your spouse is, what a wife is in Spanish? Esposa. Do you know what handcuffs are? It's the Obama salute, esposa, it's the same. Okay, so at any rate, so the dollar going up in value, is that good or bad? That's another thing that's keeping interest rates low because they're just pouring this money in here. They are competing, and the foreign investors are competing with American investors because they perceive that our real estate and our hard assets are better and safer than where they come from. So strong dollar's got problems. Let's go to the next one here. Social Security age tally varies. Social Security's broke, by the way. And official numbers with Social Security deals, there's 6.5 people that are over 112 years old. Let's say that again. 6.5 million Americans over 112 years old. So we've got a lot of fraud going on too. So we got people sucking money out of the deal. Let's go to the next one here, please. China faces tough choice. Not looking good. Let's go to the next one here. Mounting tensions. Okay, we got all kinds of stuff going on terrorism and stuff. They're doing a great job there. Let's go to the next one here. So Americans are kind of worried about what ifs and and all that. And I'm not saying the sky is falling, but this is really an Ebola poster that I got out of the post office. Isn't that just really positive? Came out on Halloween as well. Let's go to the next one here. Wealth gap really, rated a threat. Remember, capitalists, other people, the haves and the have-nots, were targets. Let's go to the next one here. We got airstrikes going on. We had Yemen yesterday, Saturday morning at 4 o'clock in the morning. American troops pulled out of Yemen. 100 special forces, the embassy, everybody got on the plane and left. You might say, what does that have to do with American real estate and Texas real estate? Oh, little chickens. This is not good. Iran has troops on the ground in Yemen, okay? And they're an oil-producing state. The number one goal of Iran, they have two, to topple the Saudi Arabian kingdom. That's number one. In other words, well, why is that? Isn't everybody happy in Saudi Arabia right now? All wars about real estate and oil and gas. All wars about real estate and oil and gas, including Vietnam, okay? So the point of the matter is, they want to topple the regime because 40% of the people in Saudi Arabia are citizens and they get a paycheck from the royalty of the oil companies or the oil revenues, and 60% are foreign visitors who do all the work. And the foreign workers, well, we don't, so all of a sudden they want to topple that. Saudi Arabia, now there's more oil than we ever needed right now and all this, and we'll talk more about that in a second. So Yemen's gone. Let's see here. Iraq is all about oil. Syria's just about gone. Jordan's under attack right now. We got Israel and we got Saudi Arabia are in the crosshairs. Well, what would happen if a tanker was sunk in the Suez Canal? Let's go there. Just one tanker, right at where they export all the oil and gas. Oil would be $200 an hour, an acre. $200 an hour. Where'd that come from? A barrel. And gasoline would be $4.50 to $5. Might be good for some people in America. Might be bad for the consumers in the retail trade. All kinds of, but things happen really quickly. Let's go next one here, please. That is what the Dow did the last time they did economic easing. Let's go to the next one here. Banks are gushing with cash. American banks don't know what to do with money right now. The Fed's lending it to them at 0.25%, and they're buying treasuries. They're not lending it out there. The question yesterday was to the Fed, what if one of the big 6 banks goes down? And he looked at me and said, why do you ask that question? Well, I was just wondering. FDIC has no reserves for anything like that, okay? I said, well, what about counterfeiting? Why do you ask that? $15 million a week are being shredded counterfeit in Atlanta alone. I said, well, I've heard this, but I don't know if it's true or not, but is there another currency that's been printed? Oh yeah, we have emergency stuff. This is yesterday. I mean, sitting like 8 of us in a room talking. We have it printed. Where is it? Not allowed to say. Well, I bet it's over there at Alliance Airport because there's an airport there and we got a printing press over there. And how fast would it take you to get to the 12 reserve banks? 24 hours. It would be quickly, he said. I bet that'd be military planes, not commercial FedEx. I guess you heard FedEx and UPS are merging. It's a big haul, FedUps. Okay, so to make a long story short, we've got a lot of risk out there right now that nobody wants to talk about. Let's go to the next one here, please. And we got unbelievably low interest rates that investors and elderly people don't know what to do with their money because that's a joke, and that's pre-tax money. Let's go to the next one here. 1% in the next 12 months are going to own 50% of all the world's wealth. Is that good or bad? Ooh, you're not in the 1%ers? It's good. The answer to any question that I ask you today is it depends. Look at other people's point of view. Let's go to the next one here, please. These 6 banks right here are in big trouble because of the oil bust. Let's go to the next one here. Fed minutes launched the stock market's going. Headline news today. We're going to get to real estate here in a second. Profits are down in the United States all across New York Stock Exchange. And let's see here what the title of this was in yesterday's paper. Magic. Stock market goes up anyway. Profits are down. Interest rates are on the verge of going up. Dividends are not going to look as attractive, but the stock market still. People don't know what to do with their money right now. We need to help them see how the euros fail and falling can ding you. Greece is going to default on their debt. They're going to pull the Argentina. They're going to pull the weekly Mexican peso dance. They're just to say, to hell with you. Could we ever cancel debt? We'll talk more about that in a little while here. All right. And the next one over here is over here. Let's see here now. Yeah. We don't have any savings. There aren't any savings in the world. Home prices jumped 12% in Dallas-Fort Worth right here. Guess what? It's not 12% across the board. 70% of Dallas County are renters, apartments and rent houses. 30% owner-occupied. And so the 12% ain't in Dallas. Unless, of course, you've got a concealed handgun license and you rob stores or whatever. But the whole point of the matter is, it's much more further out. Straight out this toll road, straight out 114 is where the growth's going to be. Let's go to the next one here. Sell-off signals. Yeah, we're worried about that. Bonds. Bonds have dropped so much in the last 90 days, but nobody's talking about it. You know, would you put your money in a bond that makes 3% for 30 years or 2% for 10? No, because of inflation risk and the devaluation of the dollar that could be coming or will be coming and interest rates going up. Let's go to the next one here. Feds saying Wall Street, they're still on Wall Street's side. They're worried that a sell-off will be an emotional disaster to American investors and to our status as the United States. Earnings seasons could be blustery. Not good. It's going down. Let's go to the next one here, please. 5 reasons why the stock markets are going to tank. We don't have to go there. You know, they've had their run. One of these minutes, I'm going to slow down. But it'll be after this speech is over. This right here is what the foreign subsidiaries are not doing well, which are boosting American stocks. In other words, they're making all their money overseas, tax sheltered, et cetera, except the US dollar is hurting exports to those countries and parts to those countries. Nobody can afford to buy our stuff anymore. So the CEOs have made the decision that American labor is too cheap, and they went overseas, and now those subsidiaries are in trouble, which are going to hit the stock market again. Let's go to the next one here. Fund loses 196,000. I do some consulting with some very large pension funds, and I'm telling them to get out of the stock market and the bond market right now and to participate in real estate because that's what I believe, not just what I teach. Let's go to the next one here. But the middle class is suffering, guys. They have no disposable income. Their incomes have gone down, and costs, regardless of what the government says, have gone up tremendously. Let's go to the next one here, please. Wages fall for all but the lowest paid. Yeah, let's go to the next one here. In other words, the lower tiers are missing piece of the recovery puzzle. With the Fed yesterday, they showed the employment going like this for the last 3 years. It's doing great. Our recovery's underway. How do you call a petroleum engineer in Houston, Texas today? Hey, waiter. It's not good. It is not good. We'll talk about oil and gas and how it's going to impact North Dallas here in a minute. Let's go to the next one here. So they're making less money. But remember, you are ambassadors of Texas. And most of our people that are coming in here and building buildings and moving their national headquarters here and all that kind of stuff, most of those people have no idea what Texas is all about. Where's your horse? Where's your boots? Where are all the cactus when they get off at DFW Airport? So you're an ambassador. Why is Toyota's coming to Frisco, Plano? No state income tax, shipping coastal rail, international boundary, cheap labor, no unions, time zone, extra 2 hours of work per day, center of U.S., travel time is less, cost less, cheap buildings, no snow on top, cheap houses relative to California and New York, pro-business attitude, you guys, self-reliant on oil and gas production, Texas electric power grid we're selling to the rest of the country, can-do attitude, which everybody in this room has, easy zoning. In California, it takes 10 years to get zoning to build one house. Here, I mean, we pay them to come. Yeah, friendly corporate legal environment. I need you to turn to your neighbor, introduce yourself right now, look them in the eye, and shake their hand. Do it right now. Do it. Do it. How are you? Don't forget. I went to Whole Foods the other day in Southlake. I guess you heard that Whole Foods is merging with H-E-B. It's going to be called Whole Butts. And the whole deal is, all those California people in there in Southlake, They look preppy, man. They do. They got their little tennis thing on, and they kind of got a little bounce. You can look at them, and they look through you. They don't look at you. I'm not going to put up with that. And don't you do that either, man. We've got to Texanize these people, or you're going to be from California, not Texas. Let's go to the next one here. Challenges. I don't want to go there, but education is a challenge. We've got some high property taxes are the largest expense on these buildings that we invest in and things like that. I'd rather have that than no income tax than an income tax. Let's go to the next one here. DFW, where we're sitting right here, is the fourth strongest market in the U.S. We have joined New York, we have joined LA, and we've joined Chicago, and Dallas is a gateway for investing. From all over the world, they're seeing this. And we're the 9th most vibrant real estate market and investment market perceived in the world. That includes Tokyo, Paris, and all these other places. So thank your lucky stars. Go to the next one here, please. Household wealth soared in 14. Do you believe that? Well, where it is in the equity of the houses. They got to keep the interest rates low so that the house values, it's a transfer between affordable housing and house appreciation. They got to get the houses up in the rest of the country, and we're going to win. Fisher, who just quit the Fed, we had some conversation on him yesterday. They think he's a wild man. Fisher's the smartest guy that's ever been on the Fed down there. You agree with that?
That's great.
Well, let me just tell you what he came out and said. He said, well, I think what we need to do, if we've got too much growth in Dallas and Fort Worth and everybody's coming here because of it, is we need to have regional interest rates. So we'll just raise the interest rates here and keep them low somewhere else so that they can keep kind of plodding along. Probably a pretty good idea. But the Fed said, no. He said, great, I quit. Awesome. So the interest rates are staying artificially low, so the spread of cap rates and interest rates are going to continue. So in a way, I guess I'm becoming more of a liberal person as I get older. I turned 65 last year. I have tried to register for Medicaid, Medicare, and all that crap. I went down the federal deal. They can't find me in the system, and I've paid in like $700,000 in Social Security, all this crap, and I'm in violation right now. But as I get older, I want food stamps. I want housing voucher. I want more health care, and I want somebody else to pay for it. This is a danger we have in this country, is that as people do that, they change. Let's go to the next one here. You have to make $423,000 gross income to be in the top 1% of our state. Everybody in here qualifies. Let's go to the next one. And that's where we rank in the world in terms of investment from the eyes of the big smart people. Let's go to the next one here. These are the growth rates that we've had, and we've doubled in population basically. We've doubled in populations in the last 30 years. They're now saying that we're going to double in population in 12 to 15 years. I mean, I want y'all to contemplate that. Another Dallas, Fort Worth, Plano, Frisco, Prospo, and Solano plopped right on top. Plopped right on top of where we are. That's twice as much traffic, twice as many houses. I mean, is that a good thing or a bad thing? Good thing or a bad thing?
It depends.
What part will you play in that? Are you going to be a player, or are you just going to watch it and bitch about the traffic? Let's make some money here, okay? Let's go to the next one here, please. And so this is a sideways deal about Toyota and why they came in FedEx and all that. Let's go to the next one here. It's going to be crazy. Here's where the population projections are going to be huge in the future. Let's go to the next one here. 40% of all growth is coming from outside of Texas, not including Mexico. Let's go to the next one here. And of course, it's going to be absolutely unbelievable. Go to the next one, please. Frisco. I did an analysis, and I looked here of where the construction is. It's Richardson, it's Allen, it's Plano, it's Frisco, it's Alliance. They're not doing it anywhere else, not to speak of except Uptown, which I don't understand the rents in Uptown. If Encore has Uptown apartments, I'm kind of concerned because those rents are 50% higher for the opportunity to meet, greet young professionals and breed. That's the only reason I can figure that their rent is so damn high. Let's go to the next one here, please. So where's the future Collin County, the future Denton County? It's going to be Wise County, and it's going to be Parker County. Let's go to the next one here, please. And that's the growth from outside of Texas. Let's go to the next one here, coming in here. DFW land. We got to talk about DFW land. I don't know how big the portfolio of Encore is on land, but I mean, it is hot, like really, really hot. Rooftops come first, then apartments, then retail. We all know that. So we've got so many lots under construction right now. There are 44,000 lots. There are 44,000 lots under construction in the 380 toll road corridor. in Collin County right now. 44,000. Development costs $120,000 per acre. Single family homeland is selling for $1.50 to $2.50 a square foot. That used to be what we sold apartment land for not long ago. Can you imagine? All these houses have got to cost $500,000, 44,000 of them. 500,000 if you use 100,000 for the lot, 20% of the total deal, and 80% structure. Are there going to be that many people coming that quick to that corridor? Well, answer is it depends. We've got some deep pocket people out there. There's great risk right now, let me tell you why, in the housing market. And a lot of people don't agree with me because they're go, go, go. We're real estate people, that we have positive attitude, and that's why we're in the business. Fannie Mae. Who owns Fannie Mae? Us, because they went broke. They're selling bonds to buy 30-year mortgages. The government was buying those bonds. So let me get this straight. So the feds are buying the bonds to buy the mortgages that the banks don't want to take the risk for long term. Everybody got that? And the government guarantees it with FHA, VA, and other mortgage guarantees. We have a totally socialized mortgage market. Totally government run. Is that okay with you guys? It is with me, because I want house prices to continue to go up. Because Fannie Mae is talking about, and the government really wants to get out of the Fannie Mae business of buying loans. Any bankers in here? Didn't think so. They don't want to own anything longer than 30 days. They want to pass the trash. And that's a fact. Nobody wants to get caught with these 30-year mortgages. Except in Texas. They believe Texas has got a 30-year run. A 30-year run that people might actually pay the mortgages back. Let's go to the next one here. So, concerns in the housing market. Young college grads, I've got a lot of them. I've known them. I've had 30,000 students over the last 25 years. That's crazy. I've touched most of them. I demented them, I guess you could say. Guess what? What's driving those young people and your kids that went to college and they get out? I said, well, have you interviewed yet? No. I'm just going to hang out around Dad's house for a while, or Mom's house for a while. Mom does the laundry, stuff like that. Well, what are your plans? Oh, I'm going to get a job. Where? It's going to be a nice environment. I'm more about, the ambiance of the neighborhood, and I'm just going to get an apartment. Don't laugh. They do not have the fire in their belly like we did. I want to get rich. I want to own stuff. I want to be a capitalist. I want to have an estate longer than my shadow. I don't want to use resources for Mom and Dad. I want to stand on my own 2 feet and stuff like that. So they go to Boulder, they get an apartment, and then they look for a job. What the hell is this? It's okay to work, and they only want to work 40 hours, by the way. They only want to work 40 hours. I'm confounded by this. I am hoping that when they wake up, that it's not too late for them. It's okay to have that attitude. I wish I had more of that attitude. The problem is, don't wake up one day and want more, and want good things and nice things and vacations and nice houses and things like that. So you guys need to put a fire under your kids, or they're going to be living with you. All right. I think there's going to be a huge correction in the stock market. Anybody want to make a bet? It's going to drop 3,000 points, and it's going to be shocking. But remember, little chickens, here's what happens. Stock market goes south, real estate always goes north. Anybody owned any Quicksilver? They declared bankruptcy last week. Their stock went from 18 to 8 cents to 4 cents to bankruptcy last Monday. Well, what does that mean? Well, I'd rather, if I see stocks going like this, or the stock market, and it'll happen suddenly. Bad things happen in a hurry. Good things take a long time. People will get out of that stock market like rats leaving a ship. And that's a fact. And it'll be just like the Titanic. The only difference will be that the Titanic had a few survivors and an orchestra. They're going to buy real estate like they're in coming home. They'd rather buy an old crummy piece of property or a Class C retail or something, and at least they can drive by and see that it's no good. Stocks just go poof. Bonds are dangerous right now. Very, very dangerous. So, money is looking for a home, and where we are today And this business, Encore, is a great place to go. And I'm not here selling them because I'm not getting paid. Let's go to the next one here. But you also get what you pay for. There right now, the government is leaning on the credit reporting agencies. Listen, this all goes back to real estate. It does. They want people to be able to buy a house. So they're going to wink at student debt. Student debt's going to be a drag in the future. But they're saying don't count the student debt and the defaults in student debt. And they said don't count the hospital bills that haven't been paid, which is the number one reason people go bankrupt, families go bankrupt in the state of Texas, is hospital debts. Yeah. So they want to wink at those two things. They're trying to artificially get the scores up so they can get a Fannie Mae loan. Let's go to the next one here. This is the number of homes that are planned straight out the toll road at 380. Okay? All right. Well, is that a good thing or a bad thing? There's going to be a lot of retail opportunity out there. There's going to be a lot of apartments. It's going to be wild. It's going to be crazy. Let's go to the next one here. Land investments have been going out the roof. They have been appreciating at 8 to 9% per year for raw-ass ranch land. And the people from California are buying it. People from New York are buying it. And the royalty owners here and the oil companies are selling their oil deals and trading them on a 1031. How many people have done a 1031 in here? You know, it's under threat right now. They're talking about getting rid of it, which is not good. Let's go to the next one here. Let me tell you about Texas homes. Then we're going to get to retail, and we're going to get to apartments and warehouses, what's going on there too. But homes are driving the entire from the bottom up. So we got to think about those things. And the way I look at it, homes are going to be golden as long as you get your hands on them. I'm going to be retiring within a couple of years if I don't croak first. If I don't croak first. I'm going to raid that retirement account so fast I don't trust mutual funds, ORPs, and all these 401. Oh, I don't trust any of it. I don't trust Walmart at all. Wall Street at all. I'm going to cash those things in. Let me tell you what Baen's going to do. I'm going to cash them in, and I'm going to buy a portfolio of rent houses in Little Elm. And I'm going to hire an outside manager to manage them. I'm going to get the cash flow, the appreciation, and the tax deduction. Yes?
We can help you with that.
I don't need help. Oh, what do you charge?
Well, depends.
Depends. I like that. When I sold my farm, thank you, you get an A. When I sold my farm in Collin County, and then I had to go in a rent house, something very strange happened. Brand new rent house, California landlord. I mean, he's preppy. I only met him once. I let my wife deal with him. I had 8 neighbors out of a brand new subdivision at the toll road in Main Street in Frisco come to our house and bring us fruit as a welcoming deal. I thought, what is this? You know, I'm a renter. I don't care about you guys. You don't care about me. What in the hell is going on? So we're just so, you know, you are a traditional American family moving into our neighborhood. What is this about? Everybody is Indian, Pakistan, Chinese, Malaysian, Indonesia. There are 8 out of 250. And they own the neighborhood. Let me tell you, this is all good. You know, the enrichment of American culture and all that. And they're all techs, and I love these people. But guess what? They never sell their goddamn houses. Ever. And there's 3 families living in the same damn house. They got the college grads, the recent college grads living there. They got mom and dad works for, Dell. And then they got their parents living there. And there's cars everywhere. And I hadn't even noticed it because I'm just a tenant. I don't care. But I'm studying these neighborhoods. It's just unbelievable. And it's messing up the typical MLS realtor relationship. People are not moving. It used to be every 7 years you moved just for the hell of it. We traded houses like cars. Instead of getting a divorce, we bought a new house. But it's true. People are satisfied with where they're living right now. Is that good or bad?
It depends.
We're not used to it. The realtors, we have 10,000 realtors in Denton County selling houses. I mean, they go to the office to look at each other. Listen, this is real. Houses are so hot right now, and there's such a shortage of them on the market. The average house priced properly, which they don't know how to price them properly because MLS, over 50% of all home sales are not going through MLS. Hip pocket sales, they call them. Or you'll see a sign, listing coming soon. What the hell does that mean? What that means is I want all the commission, and I've got the inside on this thing, and I'm not going to put it in MLS. So we got big changes going on in the traditional residential investment deal. Let's go to the next one. We've got a tight supply. It's going to stay tight forever. Cheap but very tight mortgage market. I'd say the average new house in Collin County is going to be $425. Not what the government says and not what Steve Brown says. The Dallas Morning News is $269,000 or whatever. That's not average, man. That's a mobile home averaged with a $500,000 house. Let's go to the next one here. If Fannie Mae goes away, the housing market will collapse. Interest rates will go out the roof. We'll have another house bust. But remember this handout. You're in Texas. 1 in 7 houses in Dallas that is selling, Dallas-Fort Worth, is selling to foreign investors and California people that are buying rent houses, hard assets. 1 in 7. This is like nuts. The apartments, all the people that got foreclosed out of in 07, 08, and 09, we were having 60 to 70,000 foreclosures a year. Those are families uprooted or whatever, for whatever reason, okay? Maybe they should, and I know what you're thinking. You're thinking, they never should have been approved for a loan. No, you don't understand. That was to help the economy, and we're going to do it again. They're trying to do it right now by making the down payment 3% from 10% or 20%. Is that a good thing or a bad thing? Once again, this is the business that we're in. If they don't, apartments are going to stay full till kingdom come. They're going to stay full because of the people who got foreclosed out. We don't call it foreclosures, by the way. It's an asset reallocation. They reallocate their ass back to the bank. All right, so that is why this is occurring and continuing to occur. But I would be a little cautious on the high side luxury apartment deal. Nobody's building low cost apartments right now, or affordable apartments, because that's not what Frisco wants. It's not what Plano wants. They want a big tax base with people with no kids. Let's go to the next one here. Luxury home sales are going nuts. $1 million and above houses, there's a shortage of them right now. This makes no sense at all. Why? It makes every sense. One, the move-up market from the 500 is the million. Remember the starter homes at 200,000? Those $200,000 houses are now 300,000. Those people are moving to the 500,000. The 500,000 is going to go to the next one to $1 million bucks. And we got the people from California and New York and everybody else coming here, and the foreigners. They buy them. They think it's the cheapest thing they've ever seen. They can't even believe it. $1 million house here sells in California for $4 million bucks. Let's go to the next one. Apartment boom likely to slow. I believe the pace is likely to slow. However, we're at 97% occupancy in Dallas-Fort Worth. It's awesome. Let's go to the next one here. Ups and downs. Yeah, don't want to talk about that. Let's go. We're selling houses, and MLS is out of it. House prices are at 12%, but remember, it's more like 15 or 20% in the northern counties and a lot less in Dallas County. Let's go to the next one here. Study puts Dallas near top tier. Well, good. That's in, let's go to the next one here. Austin, what a place. Let me tell you about Austin real quickly. I got a call. I'm not going to tell you who it's from. Professor Baen, yes. Could you do some research for us? Perhaps. Depends. The city of Austin has passed a law that all apartment owners must accept vouchers and Section 8 tenants. Look in my eyes. The city of Austin. What do y'all think about that? Well, depends. They want me to do a study of apartment owners in Dallas-Fort Worth to find out how many vouchers there are out there and where these people are living. The Dallas Housing Authority won't give me the data of where these people live. What in the hell is this? Put in a Freedom of Information request, and they told me it doesn't apply to them. What? I got on them on a deal, and they said, we're going to call HUD. Hey, guy, I used to work for HUD. I know HUD guys. I mean, HUD has nothing to do with you giving me the information of where the vouchers are. Whoa, let's go to the next one. I don't want to talk about that. Anywho, here's where the huge growth is up here. There's no inventory. Let's go to the next one here. Housing market is complicated, and it's going to be more complicated in the rest of the state because of the oil, minor correction in oil. It's down 67%. Let's go to the next one here. Rates may rise as bond buying stops. Absolutely, it hadn't happened yet because all the dollars from overseas are coming over here. Let's go to the next one here. Apartments unleash a pet rental fee. Anybody here charge a monthly for pets? Let's do the cap rate on pets. You know, we have got some major stuff happening that maybe you've considered, maybe you have not considered. Let's take our blinders off, get our periscopes up. The State Farm big project and all these other big projects, the Uptown, Middletown, Downtown, and all these other projects where billion-dollar projects are springing up everywhere on Bush Toll Road and places like that, where people work, live, and play, and go to the doctor and do everything on 150 acres. Do you think it'll work? The typical Texan can't imagine living there. It's only for the newlyweds and the nearly deads. I got a question. Where are the dogs going to poop? That's number one. And number two, what impact are those huge mega projects going to have on our traditional Texas investments of apartments, gas station, houses around there, et cetera? Just a wondering deal. Let's go to the next one here. Area home prices hitting another record. Okay, good. Let's go to the next one here. You know, you can get a loan. Let's go to the next one here, Steph. But please look at me before we get to apartments. These are the average house prices. North Dallas, Allen 451, Frisco 438. This is old houses, new houses, small houses, mobile homes, everything. Prospo, I call it, 392, McKinney 303, Denton 224, North Fort Worth, etc. This is how much money they have to take home per month to qualify for that stinking house. I mean, how many people make $13,000 a month to live in Frisco? Take home pay after tax, after health care, and the whole deal. That means they have to be making $250,000 a year. How many of those people are going to be coming? Toyota's supposed to bring 4,000. It's been estimated that 7 times more jobs are going to be created because of the suppliers. Anybody been to Bentonville, Arkansas? It's like a hole in the ground over there. They got their own airport because of Alice Walton. But to make a long story short, that town is there because of the service providers and the people who are selling stuff at Walmart. Same thing's going to be with Toyota. Let's go to the next one here. Foreclosures are a joke right now. We had 60 last month in Collin County. 60! Let's go to the next one here. New home market. Let's go to the next one here. Next one here, sorry. Only because that is the future house for your kids, okay? I will tell you that land values are going up and finished lot prices, whether it's apartments, retail, or whatever, is going out the roof. Remember the old adage, there's 20% lot, 80% house? In California, it's not that way at all. It's 40, 50% land and 50% house, and that's why the houses are so crummy and so expensive. It's shifting here. If we don't get our land values to 40% and the houses smaller, this deal is not going to work. Let's go to the next one here. Federal Housing Finance Agency unveils plan to loosen rules on mortgages. Does that sound familiar? Yeah, if you got a pulse, you can buy a house. Let's go to the next one. It's coming. There's the 10-year Treasury rate, consumer inflation rate, right there. All right, up on the top. What are the chances it's going to go down? Interest rates are going to get lower. That would be below zero? Yeah. Let's contemplate a negative interest rate for a minute. That means they pay you not to have money. It could be coming. Let's go to the next one here. Apartments. Last year, the Texas Apartment Association came out with their journal, and the National Association of Apartments came out with their journal. They have given us $500,000 for a property management chair because apartments are growing so fast and are so important, more so than ever. It used to be 30, 35% of everybody in Texas living in apartments, and it's changing, okay? Well, what's going on here? They say 214 will likely go down as the formal beginning of the shift to a renter-based society instead of own your own home. How interesting is that? Is that good or is that bad that more people are looking long-term to be a renter for the next 30 years instead of buying a house? That's your opinion. You went to A&M. That's bullshit, man. I mean, it changes the structure of society because renters can move at will. It's sort of like your construction, it's sort of like Microsoft. Microsoft has lots of quote, quote, employees, but 50% of Microsoft's employees are contract labor. They have a Microsoft card, but they're independent contractors. Renters are almost the same way. If they don't like you, if they want to move, it's adios amigos. Whereas a homeowner, generally, it's less liquid and you stay longer and pride of ownership and pride of neighborhood and all that. So we've got some interesting things coming. Let's go to the next one here, please. Apartments in the fast lane, yeah. When I see something like this, I'm kind of worried about a correction. And as I understand, the financing for apartments is just screaming low. May I just give you a recommendation? Borrow all the money that you can and build as many in the corridor as you can, or straight out 114. You want it to be a fixed interest rate forever and ever and ever. I want it to be one of two operating styles in your investment portfolio today, whether it's personal, corporate, or for your clients. You either need to be leveraged to the hilt, as little money down as possible, and as long as you can fixed rate, or you need to be cash. Cash. No debt. Well, I don't know about that. I want to be 50% equity and 50% debt. That seems like a nice deal. Then if there's a minor correction in the market and apartments drop by 50%, you have lost your equity, but you're still in that dog. I'm going to be all or nothing. I'm either going to be leveraged or I'm going to be all cash. Let's go to the next one here. Let's go to the next one. Yeah, it's a building boom. Half of the major markets in the United States have not recovered in apartments. Let's go to the next one here. We're doing great here. Let's go to the next one here. Operating costs are going out the roof. There's going to be an awful lot of service providers that are coming that need warehouse space to store paint and carpet and all that. So keep that in mind on the industrial side. DFW retail. Here we go. We've got some interesting stuff going on in retail, and the Fed has got their pulse on it. A lot of changes going on. First, there's going to be a pizza war. I mean, how many pizza places do we actually need? You know what I mean? I see $5 pizzas delivered now out in Plano and Prosper and those places out there. And the other thing I'm going to tell you is that Walmart has suffered for the last 4 years. I don't understand it. Because usually when there's a recession, you know the difference between a recession and a depression? A recession is when you know someone who's lost their job. A depression is when you lose yours, okay? There's no difference whatsoever, but usually Walmart goes crazy. But it hasn't happened this time. The Feds and I talked about it yesterday, and they think that e-commerce is really putting a dent. That in the lower 80% of the retail space, the B's and C's, we're not talking about Stonebriar, and we're not talking about where all the rich people, you guys, go shop, but the other ones are, we have retail space of 28 square feet of retail per American. In Japan, it's 3.5 square feet of retail per Japanese. We're way overbalanced. So what you might be thinking about in the future is what to do with the B and C shopping centers, alternative uses for them that we can create value. Because there's a whole bunch of them that are going to probably be bulldozed or whatever, because they're just not working. The tenants aren't making any money. The value of the center's going down. The profit margins is getting very, very narrow for retailers. Let's go to the next one here. Yeah, and we're looking at Simon's offers $22 billion to buy out the other, but they're not buying the average shopping center retail. They're buying the cream of the crop where the 1%ers shop. Are you with me here? So it's very, very focused, and I would be very, very concerned about buying things in the outliner. Let's go to the next one here. Yeah, that looks like we got some stuff. Let's go to the next one. We've got, wow, retail leasing is doing fine. Let's go to the next one here. $5 billion mile, 549 acres, $5 billion. That's $5,000 million is under construction right down the street down here. That's $5,000 million. The wealth concentration, the concentration of people that are coming is hard to even imagine for anyone. I mean, I don't know if you noticed, but if you're ever in LA, there are 7 downtowns in LA. And that's the way it looks like it's shaping up in Dallas. We got downtown, we got uptown, we got right here, we've got up the toll road coming like gangbusters, and then we're going to have Frisco. And it's going to be like mushrooms coming out of the ground. Let's go to the next one here, please. Yeah, of the 4,000 California people that are coming, the average house that they own is $1.2 million. We're not sure what that's going to do to California, but we really don't care. Let's go to the next one here. Household finances may curb holiday spending. That was in December. Let's go to the next one here. Radio Shack is pulling the plug. JCPenney's going broke. We have some risk here that we all need to talk about real quickly, not just to retail, but to the entire economics. And that is, what are the downside risks or chances of a internet shutdown for 10 days? Let's go there. I planted 40 bushes the other day, or had some guy come out there with a bobcat and and cut the Verizon line. So we haven't had computer, we haven't had television. We're all just wandering around looking at each other. What do we do? What do we do now? We still got cell phone connection. Please contemplate that. Bad things happen in a hurry. Good things take a long time. So if we were disconnected from the internet for 10 days, for whatever reason, okay, it could be a natural disaster, it could be a terrorism, it could be a glitch, it could be a magnetic neutron bomb goes off and does $100 billion worth of improvement to New York. I don't know. But how would it impact us in this room? Most of us are long-term investment in real estate. In a way, doesn't hit us that hard, but it would be interesting. All banking would stop. All retail sales would stop. They can't report the income, the expenses, and things like that. But the what ifs are part of my job to look at. Let's go to the next one here, please. And there is no privacy anymore. We all know that. Cash, Apple, my wife's got a business and she's getting paid every night on something. I don't know how she works it. Let's go to the next one here. The discount stuff is serious in retail. Let's go to the next one here. Shrinking middle class takes toll on retailers. Not in that top 20% of the population. Let's go to the next one here. Office vacancies fall in 2014. I don't know, on the office side, downtown Dallas is filling up. How many people office in downtown Dallas? See your hands in here. Isn't that funny? How many people in here, kids, go to Dallas Independent School District? How many people in here have a concealed handgun license? It's the same ones, keep raising their hands. Downtown Dallas is filling up. I am so impressed with Uptown, but I think it's kind of in the stratosphere in terms of rents, retail, and apartment rents. It's okay if that's where they want to go, but I don't think those people are going to stay there. When it's time to get married and have kids, they can't afford private schools at 25 grand a kid. I mean, they're going to go buy a house in a good school district. Let's go to the next one here, please. Downtown office leasing gone crazy because we're all full out here. Let's go to the next one here. A lot of kids living at home. Middle class is suffering. Let's go to the next one here. We know that. And there's poor people. But notice that where we are out here is getting farther and farther away from the poor spots, you know, because we don't want to think about them, and that's okay. Let's go to the next one here. Late payments on car loans are out the roof right now. And right now, the car loan people, if you're not current, they can just turn your car off from the satellite. It's very interesting. That's what all these cars on the side of the road are doing. Let's go to the next one here. State tax, all these Connecticut, California, Colorado, Massachusetts, Oregon, all those crazy states are going in the toilet. Texas state government and finances are in great shape. Let's go to the next one here. McDonald's is having trouble. Interesting, very interesting. Let's go to the next one here. This slide is supposed to be the threat of earthquakes to the Dallas-Fort Worth market. That's about as bad as it is. I'm sorry it's sideways. And by the way, these slides, if you have a need for any one of them, Encore is going to provide them for you if you just want to get them, which is really cool. Let's go to the next one here. Now we got to come. What's going on in the retail and the housing, the whole deal? In 2009, over 55% of all residents lived in a different state 5 years prior. Isn't that interesting? I think it's really, really interesting. Let's go to the next one here. The oil deal. It is bad, but not for North Dallas, not for Collin County, not for Denton County. Dallas is very low risk of impact. Houston's going to be terrible. Let's go to the next one here. I will tell you this. We've got to stop here for a second. This is the SAT scores for different subdivisions and various cities and school districts, et cetera. There's 900 rigs that have laid down in the United States oil and gas patch. 700 of them are in Texas. The data is really slow. Nobody wants to report that they've stopped. It's a very slow reporting deal. There's over 125 direct jobs per rig in Texas. It's mostly Midland and south of San Antonio. We know that. 125 jobs per rig times 700 rigs, all right, is about 80,000 people that are now unemployed in Texas that were making between 80 and 125,000 a year. Truck drivers were making 80,000. It doesn't impact us right around in here. But a lot of those people that were making 100 grand a year on the rigs or driving saltwater trucks or oil trucks or whatever, frac teams or whatever, a lot of those people don't live in Texas. They work 2 weeks and they're off a week and they go back to Mississippi or Louisiana or whatever. So in a way, it's diffused some of the hard impacts, except for those properties that are stationary there. Hotels, motels, and restaurants are going to be whacked. Those rural counties, there's going to be great opportunities because it's going to be a disaster out there. Contracts cheap. Construction costs are going to go out the roof. Whatever you have in your portfolio now is worth more if you have to replacement. It's called replacement cost. And because the cost does not necessarily reflect the value, except now. Who got the gold coin here? If you got one, put it in your hand and raise your hand. They all got gold coins. Did you get one? You've already lost it? Okay. You didn't get one. How do you feel? Okay, he feels bad. Did you get one?
No.
You look pissed. Okay, now whoever got one, turn to the person next to him and give them to him. This is the Obama plan. And what happened to all my money? I had more money, and now I want everybody to have one. I want everybody to have one. What happened to the money sack? Who was passing it out? Well, give everybody, would you mind, ma'am? Give everybody one. Look down at that coin. Look down at that coin. Here's what's going on. The the banks can borrow the money at 0.25% and lend it on credit cards. We have got to have more money in the hands of Americans in order for this economy to grow. It can only come from 3 places. And we're in the greatest place of all. But it can come from migration outside of the country, Mexico, Venezuela, China, Pakistan, India. More people is always better for real estate. Always. And a lot of these people are coming and got a lot of money. Number one, I'm going to make each and every one of you a millionaire right now. I know you already are, but you'll take an extra million. People are paying $1 million to become an American citizen here. And they're happy to pay it. So I hereby give you $1 million because you're here. Number 2, where is all this money going to come from for things to continue to appreciate at 12, 15, 20% or whatever's coming? It either comes from printing or it comes from borrowing. That's it. To help the economy grow. Right? Raise taxes, kills the economy. We can have more money that way, except it'll be the Obama plan. Pass it to your neighbor. I have a theory, and I've mentioned it several times, and I know there's at least 5 people here that have heard this theory before, that we're on the brink. We don't know if something bad is going to happen or something good is going to happen, but there's going to be an event. And what we need to do is, the debt is such a drag on society right now. Student debt's a drag. Credit card debt, the average credit card debt in Dallas County is $22,000 per family at 18 to 24%. That is not achieving anything except bank balance statements and income for banks, which really doesn't help anybody except bankers, of course. So, Greece is going to default on their debt. I'm not saying that we would ever default on our foreign debt, but who do we owe all this money to? Oh, I'm sorry? China. We owe it to China. We owe it to Japan. And we owe it to ourselves. So therefore, if we said, poof, no more debt, what impact would that have on society? On the economics of America? We don't give a rat's ass about the world. We have right now more debt than we could ever possibly pay back per citizen. It's $500,000 per family. If interest rates scoot up 1%, taxes have got to go up 1%, or they got to print another 1% to grow the economy. So would you rather grow through inflation, is what the guy said yesterday. I don't believe we're going to have gradual inflation. The economy can't stand it, because if inflation goes up, they say it's 2% or 1.6% or something stupid, it's not. Then interest rates have to rise. And then cap rates rise, which is not good for the value of the real estate. So I believe we're going to devalue. And it will be because of counterfeited money, drug lords, terrorism, earthquake in California, earthquake in Irving, biological event, catastrophe overseas, oil disruption supply. But under the Emergency Powers Act, the president has the right during a financial crisis, stock market drops 10,000 points, to save the country, and the banks, and the derivative firms, and Wall Street, the wolves of Wall Street. Counterfeit attacks, internet attacks, whatever the reason is, they won't state it for the real reason, and that is that we are broke. Country's broke, cities broke, counties are broke, states are broke except for Texas. And so I believe they'll have a $100 million bank, and through the stroke of the pen at midnight, it'll be very secret, the $100 million bank will become a $400 million bank. In other words, we'll quadruple the money supply overnight. Imagine that. How much capital there would be, how much appreciation there would be in houses. Okay, let's see how this will, how does this work. So look at your dollar. Everybody's got a dollar now. Look at it. It's not going to stay a dollar. It's either going to be worth 25 cents. The buying power will be worth 25 cents, or it's going to be worth $4. There's an 80% chance that that dollar will only be worth 25 cents. And it can't be through gradual inflation. It will be a devaluation in one. Every country's done it except Canada and except for the United States when there was a crisis. Germany did it, came out 9 for 1. Argentina does it year before last, 9 for 1. 9 brand new dollars for every dollar that you have, but you have to bring in your dollars to get 9 new ones, and you have to tell the IRS where it came from. That's interesting. All house prices, if we had 4 for 1, would quadruple. What it really is doing is devaluing the debt. So a $100,000 house in Mesquite that they owe $100,000 on becomes worth $400,000 overnight. But the debt, you're going to pay it back with 20. We've always done it over time for the last 70 years, but now we're at a crisis. Because if interest rates go up, the federal debt skyrockets, goes out the stinking roof. Now, if all prices quadruple, bread, employee cost, salaries, houses, everything, what good does that do, Baen? It devalues the debt. It's no longer a drag on the economy. Puts everybody in a higher tax bracket. And who loses on this thing? Who loses if we do it? Who?
All those renters.
The renter's rent goes up 400%, but their salary went up 400%. So that's okay. They don't lose. They don't care. They don't get any tax deductions anyway. Who gives a rat's ass about them? The lenders. Who are the lenders? Us, Fannie Mae, all the federal debt. We don't care. I mean, there's an 80% chance it's going to happen. I've been calling for it for 3 or 4 years, and they keep coming out with these stimuluses, you know, buying bonds from themselves. Incest is relative.
China would care.
What?
China would care.
Do we really care about China?
No, we don't, but they would care.
Do we really care about China? Okay. So there's an 80% chance that the hard assets that we own, and we're talking about in here, are a safe bet either way. Because if it goes the other way and we have a depression, they're worth what they're worth if they're not overly leveraged, or we just give them back to the bank. It's awesome. You know, non-recourse notes, and we start over again and we buy them back for 25 cents. Let's go to the next one here. If you have raw land right now, I'd be selling it. If it's agricultural land, urban fringe land, you better be ready to hold it for 10 years because I think it's going to slow down because all the lots that are under development. Apartments, be careful, try to pre-sell them. Retail, be careful, new areas only, and growth areas with great demographics. Industrial, anybody in industrial here? They're building 1 million square foot ones out there at Alliance, and you could play football in there, 15 games of football in there, 1 million square foot warehouse. Deep pockets, people are doing it, and it's going to be awesome. But Alliance is going to store all our new currency over there. Let's see here. Costs are going to go out the roof for construction. Labor's under pressure. Timber's under pressure. Steel's under pressure. Prices are trying to go out the roof. So sign your contracts now and be happy with what you already have. Let's go to the next one here real quick. Typical cycles. Don't forget cycles. I noticed when I was looking at your fabulous brochure here that every time it went down, you bought something. Encore bought something. And every time it looked like it was at its peak, it was time to go. REITs are not that way. They only buy because they're fee-driven whores, basically. And they only want a bigger portfolio. And I can't break open the egg and find out what's in any of the REITs. My MBA students, I want to study REITs. What's in there? Who says they're worth that much? You know, who's auditing those guys? Oh no, we have a way of doing it. I do too. It's called truth. Oil boom, I think oil is closer to 35 than it is going to 55. I think in a year it's going to be 75 or 80. How do you know, Baen? I got 400 wells and I'm trying not to be biased. If there's an interruption, it's going to go out the roof, and I'm not hoping that for any reason. We have become self-sufficient. Is that a good thing or a bad thing? It's kind of dangerous for the Middle East. We might care less about them. We need world stability. We don't need another war. And these bad things happen quickly. We don't know what to do with this stuff. So oil is going to be tough for a while. And then I think it's going to come back because these wells decline 80% the first year. So all this great production we have, when the drilling stops, we're only going to have 20% as much as we do right now coming in per day. What's more important, return on investment, return of investment? I'll let you go the next one here. I'm almost done, Stephanie. Here's Baen's deal. I'm going for hard assets. I'm 95% hard assets right now because I think the financial wave and boom, I think people are going to lose. I don't think the Fed can save the country. The economy is too big and diverse. They really believe they can, and I hope they can. But here's my what I recommend: gold. But it doesn't make a dividend. It's hard to store. Everybody tries to steal it. Guns are really good. They've gone up in value. They've tripled in the last, they gave Obama the NRA Gun Salesman Year of the Award last year because the only thing better than a gun is a gold gun. Come get my gold. Oil and gas always maintains its buying power. Oil and gas income usually is parity. Ground, which is real estate, which is where we are and what you guys invest in. Grub is commodities. Corn prices and everything has gone up like 50%. Good small business is great. Your tenants for your retail spaces and God. So how many deals does it take to go broke? Let's go there. One. Avoid that one. I could be dead wrong, but we really need to be thinking about positively with all these things that are around us. You might say we can't control them, so why do you even think about them? Because we should once in a while think about what if.